AAK is back to double-digit improvement in the second quarter, this after 2 quarters slightly below the company's management ambition of an average 10% year-over-year EBIT improvement. Fredrik Nilsson, CFO, starting with your largest business area, food ingredients, what are the contributing factors to this positive development?
If you start with the overall picture, I will say the positive trend and momentum we have now seen for quite a long time continue for the business area. That means that we see strong continued momentum for our dairy segment, but also our special nutrition. They are definitely the 2 segments taking the lead for the profit growth in the quarter. But what also is really encouraging is that we start to see a volume growth in the bakery segment for the second consecutive quarter.
And what about chocolate and confectionery fats?
Chocolate had a little bit of a challenging first quarter. And in the second quarter, we started to see a small improvement, so we are back to a small profit improvement. But we should also have in mind that we had a maintenance stop in the second quarter. And the reason for the maintenance stop is to add more capacity for the future for our high-end solutions. And we have also had some stretched utilization of some production lines, which had limited some of our sales in the quarter.
And lastly, technical products and feed?
Technical products and feed has a very strong quarter. We continue to see good development for our fatty acid business. The mix continues to improve. And we should also have in mind that we had an extended maintenance stop last year. And now this year we have only a regular maintenance stop.
For food ingredients, you mentioned bakery, which is the largest segment within this business area, reported volume growth for the second consecutive quarter. Would you say that you have come to terms with the challenges that this segment has faced over the last couple of years?
I will say first of all that of course it's much more positive to see volume growth now for the second consecutive quarter comparing to have decreasing volumes. But looking into more long term, I will say it's too early to say that we have the challenges behind us. Because, to develop more customer co-development solutions will take longer time. But definitely we are making some good progress in the bakery field.
And finally, operating cash flow was good in the quarter. What's your comment to this?
Looking at cash flow after working capital, we were almost 400 million positive. And particularly if you look at the working capital, we were plus 65 million in the quarter. And it's mainly good inventory management and some increased accruals that has contributed to the positive cash flow for working capital. This has been partly offset by a little bit less payables and also higher receivables due to the organic volume growth.